Hi, everyone. With tax time right around the corner, Andrew and I wanted to send 5 quick tips on ways that you can still try to save yourself on taxes for 2024. So, with that, Andrew, start us off.
All right. We will start with contributions that you are still eligible to make for last year. So, up till April 15th, you can still contribute to an IRA or a Roth IRA. Or if you have a high deductible health plan, you can also contribute to your HSA, your health savings account. Now, with IRA and Roth, and we've talked about this in the past, there's different rules on income limits as to whether or not the contribution will be deductible if you're contributing to an IRA. So feel free to ask us about that. There's things like a backdoor Roth conversion. So some nuances to it, but anyone can contribute to an IRA if you have earned income. So April 15th cutoff for HSA, IRA, and Roth. And then if you're self-employed, there is the SEP IRA. You can actually contribute to that all the way up till October 15th if you extend, but another great retirement vehicle. These are all things you can do even though we are beyond 2024.
Of course, a Roth isn't going to save you taxes today, but it essentially will save you taxes in the future. So, keep that in mind. The next tip, review your previous year's return compared to the 2024 draft before it's submitted. Can't tell you how often we find mistakes that get made. Something was left off or something was counted as taxable that wasn't actually taxable. And it's just really good practice to look at your 2 year returns next to each other, understand where the numbers are coming from. If the numbers are a lot different, why? Did somebody stop working and their income went down? Did you not take that retirement distribution? If a 401k rolled over, did you make sure to tell your CPA it rolled into an IRA so that it's not taxable? But it's just a great check to be able to explain the 2 years returns and what changed. We found a lot of mistakes just by doing that simple practice.
Did you start Social Security? Did you have a big capital gain from selling an investment or real estate? But yeah, don't always count on yourself or the CPA to be perfect or that they had every bit of information they needed, which leads us into number three. Gather and organize your tax information. So, a couple reasons to do this. Like we were just saying, make sure you have everything so you're not um, missing any of the info you need to file your return. Last thing we'd want is for you to get IRS correspondence because remember, they're going to get copies of the tax documents generated and they try to match it up. And if something's missing, you're going to get a letter, right? So, we don't want that. Um, but also, you want to make sure the information's accurate. If you do use an accountant, it's going to save you dollars because a lot of times they're charging an hourly fee. So the more prepped you can be on the front end, the better. And I've found these days that they really prefer PDFs. I mean, you can have your box of paper, but that might incur more costs if they're having to then take each sheet, transfer the information rather than uploading PDFs of 1099s and other documents.
Well, and I know a lot of people feel like, hey, if I'm unsure, I can just pass it along to the accountant and they'll figure it out. Well, a couple things. One, it may take them more time to go through it. Two, it could create confusion. If it's information they don't need, they may misinterpret it. So it's great for you to learn, here are the numbers I need to provide, and to clearly communicate that to your accountant. If there's uncertainty, we'd encourage you to try to schedule a call or a meeting and go through it that way just to make sure everybody's on the same page.
Mm-hmm.
All right, tip number 4. If you itemize your deductions, carefully review everything: medical expenses, sales tax, charitable gifts. You want to make sure that you're getting benefit of any expenses that you incurred in the previous calendar year. So I know that can sometimes be tedious. It's great to try to come up with a system. If we helped clients do IRA, qualified charitable distributions, of course that's not going to show up in this tip, but we'll send you a list. Ask for it if you don't have it in your notes what you did. But as far as these other expenses that allow you to itemize, yeah, if you paid it, let's make sure that we get it advantage of it. So there's still time to review that and make sure that you reduce your tax bill for those reasons.
I've also found if you're self-filing and you're using TurboTax, for example, it may not prompt you to enter your sales tax.
Right.
You actually have to go in there and check it, which one of the itemized deductions is property tax, income tax, and sales tax. So Tennessee, there's no income tax, but you can deduct your property tax and sales tax up to $10,000. TurboTax doesn't, I don't know why, they don't prompt you to enter your sales tax. And you can either keep all your receipts and calculate the sales tax that way, or take what's a number that they generate based on what income and zip code. But make sure you do that because we've had to amend, prior year's returns just because I don't know why, but the system it doesn't make you. So make sure
Or
you don't miss out on that one.
or there's a hybrid. You can take the standard number they give you, and if you bought something unusual like a car, you can just add that extra tax
That's
on
right.
there.
Yep, for big ticket items. And number 5, start early. The benefit there being you give give yourself time to organize, gather all your documents, review the past year's return, everything we've talked about, and that way you're not giving it to your CPA on April 14th and expecting them to file on April 15th. But you also I know a lot of people, they don't want to extend, meaning on April 15th, you file an extension and then you have till October 15th. We work with CPAs and we know how busy they get leading up to that April 15th deadline. So the earlier you can get the information to them, the more likely they're going to be able to file on time. Now, that being said, you don't want to file too early if you've got, for instance, Schwab 1099 documents that are being generated, because you don't want to miss a 1099 because you filed, whatever it may be, February 1. And sometimes they issue corrected 1099s. So you want to get the latest version of it. So you can start gathering everything now, and then once you feel good about having it all, then hand it over to get filed or file yourself. And I think John has one more bonus tip for us today.
Yeah, this is just a great time to consider, are you owing a lot of tax every year when you file your tax return, or are you getting a large refund? In both cases, it's a good time to go ahead and consider that for the current year. You can project out, we can help you project out, what is 2025 going to look like and how much tax are you having withheld along the way. If you can go ahead and adjust how much withholding every month or every 2 weeks or however often you're paid, spread that out against the next 12 months so that you don't have a large tax bill next year. Just do it while it's on your mind right now, and the longer you have to spread that over, the less it's going to impact every paycheck deposit. Or again, if you're usually getting a big refund, which some people like, it can be a forced
Mm-hmm.
savings, but you're giving the government a tax-free loan, so you could go ahead and tell your employer not to withhold as much tax and keep more of that money along the way. So
And bonus tip number 2, if you're self-employed, make sure you're making your estimated payments so you're not paying penalty and interest. And also, if you're self-employed, remember, if you file April 15th, if you owe, you're gonna have to write a check for that. And then April 15th is actually your first estimated payment for 2025. So be ready for that so you're not caught off guard needing to come up with some cash at that point.
well, and with interest rates being higher, I think the IRS penalty rate has been higher too. So I think some people are going to be surprised that penalty bill is going to be a lot more for 24.
Yeah, yeah, that's right.
Thanks for watching. Hope you found this useful.